Hey guys, can just somebody type something so I know the thing is working? All right, the NFP is about to drop. We are expecting 390. Boom. 390 was so long. Oh, 428,000. All right. Looking at Nas. So dollar yen spiking, not spiking. All right, so it's dropping. We have a I have a let me turn up the music. So I have a New Zealand long, so this is starting to look good. Can you guys hear me? Can somebody type anything? How do I chat? All right, thanks. Where is somebody else was supposed to join? Where is our friend? All right. So initial spike, we never trade the initial spike. Your initial spike usually just spikes. So this is New Zealand. So let me just briefly say, this is a weekly, daily, 4-hour, 1 hour, and 15-minute chart. This is long-term. This is the main analysis, and this is execution chart-wise. So slightly better numbers. So because the slightly better numbers, you can see that the initial reaction was a little bit of a risk on. But now realizing, I think once the this is all algo. This was pretty much all preset trades made by algos. So they dumped the market, they took profit. That's it. So we're back to normal. That's where you never. Yeah, 1 second. One sec. So let's see what's popping. I'm interested in see what reaction the stock market is going to get, because I do have a small long from yesterday on Nasdaq. If we take out these this support, obviously I'm out. So let's see now. So this is Nasdaq doing analysis in the 4-hour, obviously. So for now, we are getting a risk on. So market is liking that the United States employment is healthy. And that means, but what they're not realizing yet is if the market is healthy, the employment market, that means the Fed has no problem doing what they were said what they said they're going to do, meaning raise interest rates aggressively. As the economy is doing fine, they can be more aggressive. Why? Well, because they have a little cushion there, and they can be more aggressive with the economy without everybody bitching that they tighten too fast, too much, even though it's complete nonsense. They should have been tightening a long time ago, and they're playing catch up for the most part. Let's see. Waiting for my buddy to join so we can have a so I have a long in Nasdaq, and I have a long in in New Zealand. So I'm keeping the New Zealand. Let's see. Come on. How's the picture, by the way? Can you guys see? Is it not too? Because I'm running it on a 49-inch monitor, and it might look all. You might not see anything on your screen. In any case, so for now, it looks like we should have a risk on. If we have a risk on, that means you should be buying indices today before they open. If you pretty much the risk is defined here, we are in this range. As you can see, this is a NASDAQ. S&P is the same deal. S&P is also in this range right now. And if you want, you can go you can go long now on S&P and put your stops below 4,100. So you risk 50 points and your upside is 150. So it's 3-to-1 right here, this trade right here. And you can definitely take it. I have S&P and NASDAQ on my personal accounts and clients' accounts, and on Signals, we have only NASDAQ. So far it's doing good. All right, thank you for the confirmation. The BTC, oh yeah, and if you guys have any requests, whatever. Well, Bitcoin is responding exactly in line with the overall risk sentiment in risk assets. So so overall picture, what's happening? As the easy money policies or easy stupid money that have been chasing all these silly projects are evaporating, even the good projects are now going to have they're not going to have the easy money coming into them to spending willy-nilly. That's what's happening with all the unicorns in Silicon Valley that have not been profitable for 5-10 years, and easy money is so they will not be getting any more money, easy money, to run their unprofitable businesses. So same thing with the crypto. A lot of all these projects is still, I'm just gonna look at what happened with NFTs. NFTs, right? The Coinbase released their NFT platform. Nobody signed up. The volume of trading is down by 90%. The prices are down, incredible, right? Like the first tweet that was sold for a couple of mil, it was sold for like $800. So the era of stupid money is coming to an end temporarily. Even if you look at the, so Bitcoin is in a peculiar place. Why? Well, we're coming into this, we've been in a 2-year range, basically, 3, well, 2. So this was 2021. This is a weekly chart, upper left-hand corner. We've been in this range right here, obviously, and I think we're going to be retesting these lows here around 28 to 30,000. So let's say 30,000. I think 30,000 is pretty much if all else remains the same and the NASDAQ and everything else keeps selling, I think 30,000 is in the cards. All-time high from 2018 is 19, well, to call it 20K. That would be the next stop. If we breach 30,000, 20,000 is in the cards. At 20,000, if you see that price, you could probably go along there, put, I don't know, something substantial, but not too much. Something you can forget about for 2 years, for example. Throw, I don't know, you can just throw like $1,000 in it, just forget it. And if it, you can put it in small leverage if you want to. And if it goes to 100K, it goes to 100K, right? So your 1,000 turns into 5,000. Or if you put 10,000, it turns into 50K. Or if you use leverage, which probably will be better, if you can turn 1,000 into 10, 15 grand. So with crypto, we obviously had this aggressive sell-off yesterday, just like we had in the stock indices and all the risk assets. They got hammered. And I think they got a little bit oversold. So today, if the data came out, it's benign, very likely we could bounce because it's a Friday. So you could, if you're day trading Bitcoin, you could maybe pick some up here. Of course, you're always running a risk. This is prior. We still, in about an hour, the cash market is going to open up. And what happens during the cash market? A bunch of orders that were sitting will now get executed at exactly 9:30. The order flow is going to go, and the initial order flow can wreak havoc because all those orders were placed last night. They don't even know what happened with NFPs, et cetera, et cetera. They just had orders to execute upon when the market reopens. So with the market reopening right now, this is you might have volatility that if you have too tight of a stop loss, you can get kicked out. So keep your stop losses wider, trade a little smaller. And I think the real move we'll see will be around, well, the real move will reveal itself by about 10 a.m. Why 10 a.m.? Well, because 9:30 is when the cash market opens, volatility, all the orders get executed. If those are large orders, you can't, it's not you and me trading, right? It's if you have $100 million order in some stock, or 500 million, right? Or $1 billion order, you have to find the willing buyers and sellers, et cetera. So it takes time to chew through all the orders that accumulate. All right, let's see what's happening with the, oh, Archie, hold on a sec.
How you doing, buddy? You all right?
Hey, yeah. What are you looking at?
To be honest, I haven't been trading NFP, but I was looking at waiting for a bit of a rebound from on gold. Clearly, we've been, the rates that have been coming out, unemployment rates, participation rates, all of that sort of stuff has been pretty neutral, which has been kind of a surprise because we haven't seen that for a while. But yeah, I'm expecting to see a little bit of a further push to the upside. I'm waiting on an imbalance on gold, a little bit higher up.
I'm actually, I agree with you. Let me actually remove this channel. It's been on a daily, it's fine. So we were doing the on the 4-hour chart. You can see that higher high and higher lows. So if we take out these highs, I think we're going to have, first of all, an inverted head and shoulders. So we're going to be targeting a daily, I think, this trend line here around 1930s, 40s, 50s, or at least 1920, back to 1920. So we are, unless we take out this low here, I wouldn't, that's going to be trouble sign, because you have a few things going with that, with gold. Where is this thing? So right here is the, so what happened right now, as I see it, we just retested this order block here. This was previous resistance. Now we are bouncing from this support. So, and we have a follow through. We had a nice pin bar, we follow through candle, and even more.
Yeah,
right. So
exactly. I'd probably expect to see what happens at like the 1900 level, clearly being a psychological level as well, and just at the bottom of that kind of imbalance. I'd be looking to see what happens there. If we see, a lot of rejection there, I actually might be looking to place an intraday sell.
Right. Well, right.
If we get that today,
back up.
Not, but if early next week, possibly look for a day trade to the downside. But as you said, a clean break of that, we should be looking for higher sort of levels.
Right. I completely agree. Don't forget, today is Friday, right? So on Friday, a lot of traders don't want to keep their orders through the weekend. They don't want to keep their positions open
Exactly.
over the weekend. So you're absolutely right. One of the ways to play, I like to play Friday markets is I know when the London closes, I know when the US closes, right? So if I see an overstretched spike into some solid resistance, like I would see in gold around above, well, around 1900, slightly above it, those highs here, you can definitely try to scalp short as an intraday, just make a quick
Exactly.
pocket change, so to speak, type of
Yeah,
trade.
especially when like the volatility decreases.
Right.
You know, the big players aren't pushing the price, you know, higher and higher. They're just going to, you know, trap everyone out with like some sort of liquidity breakout candle. So yeah, you know, as you said, catch a few sales, but we'll see what happens today. Otherwise, to be honest, the NFP hasn't been as exciting as it can be sometimes. So
yeah, I mean, we've seen all the fireworks already with the FOMC, I think, with the pump and now the dump yesterday. This was as you can see right now, this is NASDAQ. There's nothing happening where we tested today range lows, range highs, and we're in the middle of this whole thing. So I think honestly we're gonna tap those shorts here. We're gonna tap liquidity before the cash market opens. If I'm a market maker, I would want to push this price right below these lows here to get the sell stops and then reverse the market to stop them out and create a trap like the trap we created on as you can see. Let me show you. I did a whole video about it. Oops, I did a whole video on it yesterday, the day before yesterday, and I put on Monday. So this was a Monday bar. Basically what happened was we took out a key resistance and then we reversed, and I knew that the FOMC is on Wednesday, that no more new capital is not going to be being committed, et cetera, et cetera. I made a whole video about it, and I explained how all these traders are trapped. And on Wednesday, when the FOMC came out and the spike occurred, it's these traders just being stopped out. People who went short on the break of this level, getting stopped out. That's all. And then everybody got taken for a ride. Everybody who hopped on the fresh longs. Everybody who this is a daily chart, so 1 bar is a day. Everybody who got hopped on the longs on the Wednesday thinking, oh, we're gonna get a follow through. Now they are getting stopped out. So everybody, the new shorts, they got stopped out early in the week. People who thought the party is back on, the punch bowl is spiked. Let's go. We're gonna have the rally in risk. Now they got stepped out. So today, this is why you have this candle today here. It's a Friday and everybody's dumbfounded because everybody got taken for a ride. So it's a very interesting situation, honestly. And to be quite honest, I don't see 100% foolproof trades. Well, you rarely do. But this is why we're seeing such a muted reaction on everything. For example, yeah, even euro. I mean, we traded 30 pip range with the news, when usually this is much more stronger reaction. So I think we're going to be waiting for the cash market to open. Wait 15 minutes. After the 15 minutes, I'll reassess the situation. I might play around a little and buy gold around if it drops back to 1970 level. I might go for a small long against these lows, maybe here or this low here. But if I have a 4-hour close below this trend line, I'm out. And I'll be probably even looking for shorts for next week, because I really think that gold, ultimately, I made a post of the video. So we were in this huge triangle consolidating for what, a year. And then we had a massive breakout, double top here. But I think we are retesting this trend line here. We're going to be retesting 1930s, 20s, as often huge breakouts like this do. They retest and then they continue up or down. Doesn't matter. You can trade both sides. Once you see the reaction of, if you see a bounce coming from this trend line, you go long. And if it starts closing below it, then you know we're targeting these lows here, probably this trend line here. So that's a weekly chart, this daily, but that will take months and months to play out. But overall, that's how I'm looking at this whole situation. All right, you wanna drop something else? Hey, good morning, everyone. I'm just reading up the. Oh, can't see the chart screen. Weird. Some people said that picture is there. All right. So this is gold. Let me see what's happening with the NAS. All right. So again, as you can see, the algos are just pushing the price up, down. I think we're gonna have a range type of day, or or let's wait for the open. This is not. It's in 40 minutes. Maybe I'll do another one in 40 minutes. For now, I'm still keeping my positions on. It looks like dollar yen wants to rally. So we might get a continuation of yesterday's rock and roll. Dollar yen looks like it's you can go long dollar yen right now with a very tight stop loss, basically, because look at here, we just essentially this is a bull flag that it's about to be broken. So, but we have to wait for the candles to close. This is a 15-minute of, this is a 5-minute chart. So this is a 5-minute chart. So don't put you what is it, 130.60. You can risk 20 pips, go along here now and risk that 20-30 pips to target for another spike up to 131. Easy. I think if we have an hourly close above this breakout point, this candle is going to close in 7 minutes. You can actually go long, put your stop below this candle, which is 130.10. So about 50 pips, and you can target these highs here, maybe at 131. So slightly above, but again, it's Friday, so small size. Don't bet your house on it, right? Definitely can go long on dollar yen right now. All right, guys. Hope it helps. I just did a quick impromptu thing. I'll make sure I'm going to try to make this more often and more a thing, maybe even do some kind of weekly webinars, daily webinars, whatever, trading, and we can do live trades as well. All right, guys, hope it helps. Enjoy.